You are listening to chartingwealth.com for Wednesday, the 21st of February, 2018. We see stocks are mixed, gold and bonds down. Let's jump into this market. Remember, we had a weekly vertical crossover going down strong for the week ending the 9th of February. What we saw over the course of this immediate prior week ending the 16th of February was a green up candle, but with a wick on the bottom, a long wick on the bottom, and a short wick on top. So far this week, we have an up green candle. It is an open box just with a wick on top, but a very small candle. In fact, we are looking at Heikin Ashi candlesticks. These are not your typical candlesticks. Heikin Ashi means average pace in Japanese. 64,000 people have listened to the training that we have on Heikin Ashi candlesticks. It is an extremely good training. Please go to our YouTube channel or our website and listen to that training to understand more about these valuable candlesticks. It is just an extremely good way to help track price movement. What we see happening so far in the week is we see that the price percent oscillator, which is our master indicator, is heading down. It actually looked like it would probably go flat over the course of the week and over the course of the day, actually. And then as things wore on, it ticked further and further over, going down, spreading away from the red signal line. Derivative oscillator has already heated up, going down again. It's just the first day of the latest week candle, weekly candle, which of course means a 5-day candle. So it's only 1/5 drawn so far. It can change a whole lot over the course of the week. But what we see happening with the first day of the week, and again, this is a shortened trading week because the markets were closed on Monday. So we're just looking at price action on Tuesday. And what we see happening is we see things moving down. Now, as we go into the 2-day chart, we see that, again, we have a red candle. It's a red open box candle after a green candle. It's only the first day of the latest 2-day candle. Things were actually moving up toward the red signal line, and they've backed off a little less than flat on the price percent oscillator, heading down a little bit. Derivative oscillator continuing to lose downward momentum. But we do have a red open box candle. Now, again, we'll continue to watch that. It has a wick on top. So, again, it's not a strong red full box down candle, but it does show us some weakening, and that comes from the 0.63% down move over the course of the day on Tuesday. And again, this is a weird week. If I say Monday, I don't mean Monday. The markets were closed for the President's Day holiday on Monday. So whenever that happens, it gets me a little confused. So please forgive me. This is like the first day of the week, but again, it's Tuesday in a shortened trading week. What do we see going on with the derivative oscillator as we look at the 4-hour chart? Losing upward momentum, and in fact, we see the same thing on the price percent oscillator. We see indecision tending down in the morning with a red doji in the morning on the 4-hour chart, and then down movement in the afternoon with wicks on the top and bottom, a longer wick on the bottom in the afternoon. What are we waiting to see happen, my friends? We are waiting to see if indeed this 4-hour chart is going to cross over going down. If it continues to head that way and crosses over going down, of course, we still have the 2-day in a confirmed down move and the weekly. That means we would jump into a down move. Hasn't happened yet. Market could tick up tomorrow. But if we do have a crossover on this 4-hour chart going down during the course of the week, we will be poised to get into a down move. Now, what does that mean? Well, if you've not listened to our training on inverse ETFs, how to make money when markets crash, you need to, because an ETF like SH, Sierra Hotel, that is an actual inverse fund to the S&P 500. Why is that valuable? Well, because it is a short fund, and you can practice trading that because it goes down when the market goes up. It goes up when the market goes down. And if indeed there is a crossover going down, you can look at a short fund like that to practice. And again, remember, not a stock calling service. We don't give market advice. We're an education firm, but we want you to practice shorting the market when it presents that opportunity. Now, will that be presented? I'm not a prognosticator. I can't read the future. I can tell you, though, that as we continue to watch this market develop, we are potentially seeing signs of a crossover going down. And if that happens, we're poised to take advantage of that. Now, it hasn't happened yet, but if it does, we're going to trend follow. That's what we're looking for and waiting for. Now, as we go from the S&P 500 to the Qs, that is the Nasdaq 100, the tech stocks, we see a different looking set of things. First, it was up for the day on Tuesday, 0.20%, as opposed to the S&P 500 being down 0.63%. So we see a green open box candle. That portends typically strong movement. We see that the price percent oscillator is flat, but the derivative oscillator continuing to gain downward momentum. That's primarily because, again, of the strong down candle 2 weeks back. But we shall continue to monitor the S&P 500. We still have confirmed down move on the weekly market, the weekly trend, and we look at the 2-day trend. It is still confirmed down, but of course, what do we see happening? Well, we see that the price percent oscillator is moving up toward the red signal line derivative oscillator, losing energy. We do, however, have a red open box candle. It's not a powerful green candle. It's just the first day of this latest 2-day candle. It will finish drawing at the close of the day on Wednesday. As we dig a little deeper and look at the 4-hour chart, what do we see? An interesting thing happening. The market topped off last back on Friday the 16th. So over the course of the day, and that was Friday morning, over the course of the day on Friday afternoon, it moved back as far as our Heikin Ashi candlesticks goes and really did not move above, over the course of the day on Tuesday, did not move above where it hit Friday morning. Could that be a top? Might. We see the derivative oscillator losing energy, the price percent oscillator not heading up at the same strong angle, but still heading up. So we shall keep an eye on the Qs also. If the Qs rolls over and heads down, crosses over going down on that 4-hour chart, we will pull the trigger and jump into that down move also. Hasn't happened yet. We are watching for it. We will tell you what we see when we see it, and it may not happen, my friends. Remember, we're trend followers. We don't prognosticate. We don't guess what the market's going to do and try to will it in that direction. That is the way to lose every dollar in your virtual trading account. Market doesn't work that way. We don't live on hopes and dreams and wishes. If you want to do that, go to Las Vegas. Okay, now back to the weekly, looking at TLT, the 20-year bond fund. Remember, we had that weekly vertical crossover going down for the week ending the 5th of January. Friends, it's still going down for the day 0.44%. Price movement is below the weekly trend line significantly. As we look at the 2-day chart, we see that we're going to at some point have to redraw our 2-day chart because we really flattened out there, and we're still waiting to see how this is going to play out. We got to wait for this 2-day candle to finish drawing before we can redraw our trend line on the 2-day chart, but we did punch through it on that 2-day chart ending on the 16th, Friday the 16th. And what we see is potentially a flattening and bottoming out at about the 118 mark, somewhere around 118.10, 118.16, something like that. We see that the price percent oscillator still headed down a little bit, but the derivative oscillator is losing downward momentum. We'd like to see that continuing to move down. But again, our primary indicator, of course, is the price percent oscillator. What do we see as we look at the 4-hour chart? Well, again, somewhat concerning is we see things sort of bottoming. Again, somewhere around on this 4-hour chart, it's down to around 117. And remember, we talked about the crossover going up and potentially pulling your position out somewhere after the morning of the 13th, Tuesday the 13th. Could have pulled out then and you would have been fine. What we're waiting for is to see if bonds are going to cross back over going down. And if you see that 4-hour chart rotate back over and you have gotten out of bonds, you might want to consider getting back into them if they start blowing through that 117 pattern, somewhere around 117, 117.98, 118. Why don't we just call it that? And again, that's where you might put your trigger in. is if indeed you see things start to roll over in that 4-hour chart crossover going down, you might look to put your trigger in somewhere around the 117.50 mark, something like that, if indeed that crossover on the 4-hour chart occurs. That can be your trigger. And you could maybe enter a position of half of what you were thinking about potentially getting in to that inverse trade on. And then as it continues to move in the right direction, another half. We're going to do a training on how to enter and how to exit trades, because sometimes it's smart to enter a partial position, and then when it moves in the right direction, enter the rest of your position. So we'll talk more about that in the future. Things to learn all the time, my friends. That's where we are on the 20-year bonds. Again, moving in the right direction down on that inverse trade. And as we go to our last chart, we look at gold. What is gold doing? Down 1.34% for the day. We had a weekly vertical crossover going up on gold all the way back on the 5th of January. Gold went up nicely for 3 weeks after that and has really been sliding sideways since then as we look at our 4-hour chart. Still in a confirmed up move on the weekly, but down on the 2-day. Derivative oscillator losing upward momentum. Price percent oscillator heading down on that weekly chart, but hasn't crossed over yet. Now, it did cross over going down on the 2-day chart that would have taken us out of the gold play in most circumstances. Most folks, when you penetrate the weekly trend line and the 2-day crosses over going down, they pull their position. You don't have to if you want to just keep staying in on that weekly chart, but typically not a wise thing to do. Still in the negative as far as the price percent oscillator goes and the derivative oscillator on the 2-day chart. And as we take a look at that 4-hour chart, what do we see? Well, it was moving up quite nice. We talked about how it was topping out somewhere at about the 128.50 mark or so. And what did it do? Started moving down on Friday afternoon. And then, of course, blitzed down Tuesday morning again, first day of the trading week since we were closed on President's Day. Blitzed down Tuesday morning and Tuesday afternoon. Hasn't crossed over going down yet on that 4-hour chart, but appears to be headed that way. So keep your eye on that, and we will continue to watch gold and see if indeed we get a trade on our standard trading. Now again, we keep monitoring this 4-hour chart to see if it's working for us. And as long as things trend in gold, that 4-hour chart can be a total trading chart for you. But again, the shorter the chart, the more closely you've got to watch it, like you would need to on the morning of Tuesday, the 20th. Folks, that's where we are as we end the day. Oh, do remember, we're going to post one more time for you the Bitcoin training. We're going to send all of our email subscribers are going to get, that is the daily market review subscribers, you're going to get the Bitcoin training. You're going to get the chart and the video. It's coming out to you free again this evening. Again, if you want to get all the training that we put out, all you have to do is subscribe. You do that at chartingwealth.com. Put in your name, your email address, and you will receive all the trainings that we provide to you for free. Folks, that's where we are as we end the day on the first trading day of the week, Tuesday the 20th, as we go into the trading day of Wednesday, the 21st of February. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.